Hello, everyone, and welcome to this new big CEO interview on the Funded Trading podcast. My name is Hidde Simons from Funded Trading, and I'm joined today by some big names in the trading space. I'm very happy to welcome you guys, Cameron Foos and DY from Hydra Funding. Welcome to you both. It's great to have you here, and I'm very pleased to meet you.
Yeah, for sure. Thanks, man. Pleasure to be on.
Thanks for having us.
Thank you. It's always good for people to see the real faces behind the firm, and especially in your case, some familiar faces in the industry. I think a huge part of our audience already knows who you are. But for the ones who don't know, can you please introduce yourself and who you are and what you are doing or have done in the crypto or trading space so far?
Yeah, my name's Cameron Foos. I've been trading for 20 years. I got started in 2005, and it started out with me just starting a blog for free while I was in college, and then that blog kind of blew up over the next 2 years while I was still in school, just providing value. And that was just kind of where it all began. That was in the U.S. stock market for that just led to 16 years of trading U.S. stocks until I did take a break from trading for 2 years. And then as we led up into COVID, uh, I started kind of getting involved in crypto. And then just that was the beginning of the 2020 bull market in crypto, and then absolutely crushed it in crypto because I basically had 16 years of trading experience and I just migrated it into crypto, which was a lot more volatile, a lot bigger moves. And so combining that skill set of 16 years trading experience in stocks, uh, moved that into crypto. The reason why I quit stocks is because I moved to Asia. I live in Bali now, and the US stock market opens at like 10:30 p.m. here. And so it just became overwhelming to try to work in the middle of the night to the point where I was like, I can't do this anymore. And I didn't want to go back to the US. So crypto and Forex was a way for me to still trade, but not be locked down to New York time zone anymore. And so I was fortunate enough to find a different asset class to take my skill sets in and then leverage it in a different market that was open 24/7 as opposed to being locked into New York time zone. So yeah, I've been doing this for way too long, 20 years. It's been a long journey for sure. So, and now me and DY have Hydra funding together, and I also have my educational platform that I've been doing for probably the last 16, 17 years.
Okay, sounds awesome. And what about you, DY? What's your story?
Yeah, so I was actually Cam and I met when we both moved to Bali back in I think 2019, and I was working with him back then on his trading education business, running ads, doing the marketing side of things back in 2019, and we developed kind of a good working relationship then. And when I think in 2022, when prop was kind of starting to boom a little bit, firms were coming up, we were looking at FTMO. I remember showing Cam, I was like, hey, have you heard about this prop firm thing? I feel like this is something that we could explore, or potentially worth us looking into, because it seems like a pretty good business model once you understand how everything works. Because when I first saw prop firms, I thought they were just a complete scam. I was like, who's gonna give just random people on the internet money to trade with? This
Yeah.
doesn't make any sense.
I remember the
Uh,
first time you
but
showed me FTMO, I was like, "What is this? Like, people are signing up for this? Like this?" I mean, but it's a great business model once you understand it.
Yeah, and I think, I remember us talking about it, and once we understood how the model worked, we were like, this could really be a win-win. We also definitely from the beginning saw the potential for there to be a lot of loopholes, let's just say, in the model, right? Because you don't know how anyone's running their business. But back then, I believe we had a working relationship with 8cap, who was the broker for a lot of different prop firms still back then. And yeah, we started exploring it. We started exploring how to do the tech side. And we basically spent, I think, most of the end of 2021 to most of 2022 figuring out how we're going to do it, which partners we're going to use, how to set everything up. And it took almost a year for us to get things going off the ground. And when we finally got started, I think it was October 2022, and we've been running for more than 2 years now. And it's definitely been a very interesting journey in the prop space, as I'm sure Hide, you also know. The past year and a half probably has been a little bit of turbulent times. So we got to catch like a little bit of the good times, the good ride where, it was just everything seemed like the industry was booming, tons of traders were coming in. And then once that MFF thing happened, I think prop firms kind of went into a bear market a little bit, and we had to ride that through, and that definitely wasn't easy. But it's been a great journey so far. We've learned a lot, and yeah, I'm glad we've made the right decisions to still be here today, never having missed a single payout. It definitely wasn't easy.
Okay, sounds really delightful, and it's good to see that you have been traders yourself as well. So you sort of know a journey a trader goes through itself. The people behind Hydra funding know what they are doing, and you have experienced yourself what it's like being a trader, so you know the journey a trader goes through on its way to success. But let's get into the next question. What I'm curious to know is, can you give us an insight into how your firm operates and tell us about your business model and how it supports the operations of Hydra funding?
Currently we have two sides of the business. We have two very distinct products. One side, which we just launched about 3 months ago, I believe, in September, is the crypto prop firm. That's a brand new product, native crypto liquidity. We allow traders to trade 26 coins, including Bitcoin and Ethereum. They get 5x leverage on Bitcoin and ETH, and they get 2x leverage on all the other altcoins, most of which are very high liquid coins because we wanted to prioritize the trading environment there and make sure that everybody had a good experience, especially when you're trading with funded accounts. So, I think everyone's kind of familiar with the prop model. We also have one step, two step models on the crypto side. And on the Forex side, we also offer the same thing, one step, two step funding models. I believe we're one of the few
Hmm.
firms in the market that offer challenge sizes up to $1 million. And as it stands right now, our max allocation is $1 million. So, you can take one shot to get immediately up to our max allocation, which I don't think a lot of firms offer. Uh, as far as this model, I think we've been quite consistent in our product offering. The main ethos behind what we want to offer the community, what we want to offer traders, being traders ourselves, is number one, we want things to be very, very clear cut, very straightforward. So no hidden rules, no, like, we wanted to make everything as automated as possible, meaning you're not going to find things like, oh, there's some type of margin requirement that will only look into after you pass a funded phase or after you request a payout, which I know has happened in the industry. The whole idea behind our model is to make things as clear cut as possible. What you trade in the challenge phase is going to be the exact same environment that you trade in the funded phase, except there's no profit target in the funded phase. That's the only difference. Nothing else changes, right? So we wanted to make sure that whatever strategy traders are using to trade the challenge will be directly applicable one to one on the funded side. Um, and as far as our operations go, we I'd like to talk a little bit about risk here because I think we all know by now this entire business is about a risk management business. So we actually have a partner, that is entirely managing our risk side for us. They have their entire risk team. They are monitoring everything from, let's say, blacklisted traders across the multiple firms that they help operate. They also manage and look at prohibited trading activities. Some stuff that goes against our rules, arbitrage, stuff like that. And we pay a lot of money to them to handle this side of things and make sure that we're on point as far as the risk management things go, because that has to be the priority in this business. As we've seen in the last year, firms that have gone all in on marketing and not really shored up on the risk side eventually end up upside down in the books, because if revenue for some reason in the industry goes down, right? We go through some turbulence. Traders start to get a little bit scared. They're unable to pay out traders because they haven't kept enough of their initial funding or their revenue to pay out traders, and that's obviously a very big problem in the industry. So we've taken a lot of steps to make sure that we never end up on this side of things that we've always taken a much more conservative approach as far as how easy to pass our challenges are, our pricing. We're definitely not the cheapest out there. We're not the most expensive, but we're definitely not going to be the cheapest plans out there, because we understand that there's a fine line to play. And if you want to go for the cheapest, easiest to pass challenges, you as a trader also have to understand that you are taking the most risk on a firm, and you have to evaluate whether that's something that's worth it for yourself. So yeah, that's a little bit about how we approach the business and our model.
Okay, really great. So what you're saying with the your focus on the risk management, the business model you explained looks very sustainable in my eyes, which kept me wondering. You have a focus now on crypto, a specific crypto prop firm. Cryptocurrencies seem to be the money of the future, and every cycle it looks like it's getting more and more sustainable for the long term. Regarding sustainability, what steps are you taking to ensure the sustainability of Hydra funding? And do you think your focus on crypto makes this more sustainable?
I'll let our crypto expert take this question.
Uh,
Do
yeah,
you
I don't think it's necessarily a sustainability thing. I think the forex industry is one of the oldest industries in the game, so I think that's always kind of be the core foundation CFDs of the funding model. Obviously, we've seen other firms expand into futures, and not a whole lot have expanded into crypto yet. So we're one of the first, if not the only, who has both a crypto and a CFD funded prop firm at the moment. So it definitely opens the door to more expansion on that side. I think our sales numbers and data from the last month or so, it's about 50-50. So we're doing about 50% in the crypto funding and 50% in the CFD side. So yeah, it'll be interesting to see how it goes. Obviously, as I've experienced since I migrated into crypto, crypto goes super hot and then it goes ice cold. So when we're all of a sudden we're in a bull market, things are pumping, everyone wants a piece of the action. So all of a sudden sales just start jumping, profits in my trading starts jumping just out of nowhere, like extravagant numbers. But then when the bull market's over, everyone loses their ass, and the business side of things and people's portfolios can easily diminish quite a bit for an extended period of time. So I think there's going to be a lot of ups and downs and unsustainability, not unsustainability, but instability on the crypto side. We want to be able to offer that product when things are hot. Then obviously when bear markets come into play, it's going to be a little bit slower, which is why I also think it's important to have the CFD side, because there isn't really necessarily bull or bear markets per se in forex. If you look at a 20-year chart of like Euro USD, it's just a flat line, but with a lot of in between movements. Where if you look at a 20-year chart of Bitcoin, it's just fucking skyrocketing in one direction. So, but with a lot of big downturns inside. So, the crypto product is an amazing product to be able to take advantage of when we do see these crazy runs in crypto. And the CFD forex side is kind of our stable core business, because that's much less cyclical. But I think everybody wants a piece of the crypto action when it's hot.
With all these scams around these days in the prop firm industry, and especially in the past years, as you described, DY, it's increasingly difficult for traders to determine which proprietary trading firms are trustworthy and which firms are not. Considering that someone might be interested in joining Hydra funding, could you please share what qualifications, skills, or experiences are needed for a trader to join?
One of the benefits of, let's call it, the modern prop trading industry is the fact that the barriers of entry are very low, right? Because, maybe if you went back 20 years, if you wanted to become a prop trader, your opportunities were maybe Wall Street. You had to join a brick and mortar prop trading firm, or, like my brother, he's trading for Morgan Stanley. You had to go work for a bank, to become a trader, manage other people's money. But with the advent of this modern prop trading model where technology has come in, everything is automated, right? The rule sets, everything can be monitored live. It opens up the door to a lot of people. So by bringing down that barrier to entry, of course, it also opens the floodgates to just anyone who thinks they can trade can take a shot, right? And who no one's going to tell you you can't, right? And especially with trading, it's a very personal journey. It's, you got to go through the ups and downs. You got to decide that this is something that is worth it for you to pursue. It's a variance based career. It's a variance based game. I back in early in my 20s, I played poker full time for 2 years, and even having that experience, getting into trading, it was still a tough transition for me. Like, still just after experiencing variance on the highest level, playing poker, coming to trading, it's also very much the same. So I don't think I think that maybe qualifications wise, if you want to talk strictly like paper, nothing, you don't really need any qualifications. But I think a lot of it comes down to whether you have the mental aptitude to handle the ups and downs of trading, because not a lot of people are built to accept losing. And if you cannot accept losing, if you cannot endure losing streaks, if you cannot endure drawdown, if your psychology gets heavily affected, then you're just not cut out for it, and it's not a slight to anyone. I think it's also a personality dependent thing. Maybe you have to be a little bit of a masochist. You like the pain a little bit of being in drawdown, losing money sometimes. I think there's a reason why more than 90% of traders fail, right? It's just a very, very difficult thing. We as human beings, especially with the education system, we're kind of used to linear progression, right? You go to elementary school and then you go to middle school. There's no chance of you going back to elementary school after you go to middle school, right? If you make it to university, maybe you just fail out of university. They don't make you go back to high school. Whereas in trading, if you're thinking about your account balance, and your profits, it can very much be a back and forth. You can very much give back all of the money that you made and more if you're not careful. So, it's definitely not a linear progression, and it's not something that people are used to. So I would say, if you want to talk about qualifications, it's probably a two-part 50-50 of, do you have what it takes mentally to kind of handle the ups and downs? And are you interested in going to a
Well,
job where, or making a career out of something where you could work for a month and lose money? Not only not get paid, but be in the red, right? You have to decide whether you're okay with that. And I think if trading is something that's ultimately interesting to you and fulfilling to you, you're going to get past these hurdles. And, if these psychological sides are too much, you're never going to make it.
Wonderful, wonderful, wonderfully said, and really, I really can find myself in what you're saying. Like, you need to really put your ego aside and put your ego to the side, because, like you say, the numbers don't lie. Like 98% of people fail trading, and when you hear that, most people still think like, okay, but I can do it. I'm better than this. I'm better than 98%. I'm like the 2%
And I mean,
can
we
do
we
it.
know the numbers on our side, right? So I think,
Mm.
on average, we get about a 10 to 12% pass rate on average on any given month on challenges, and the average funded account only lasts for 22 days. So, take those numbers,
yeah,
as some insight into how difficult the journey actually is, right? Because even after you
Mhm.
pass, you most people are still losing their funded account within 22 days.
Yeah, that's crazy. Is that the main reason? Do you have insight in that? Is it because they are over leveraging, or over trading, or putting up their risk, or what's the main reason why people mostly fail challenges?
I would say we tend to see people that go on hot streaks. I think the hardest thing has been, finding people that are consistently profitable. Someone that's able to just generate profits, knows how to manage risk, endures a losing streak without blowing up the account. Because I think most people don't realize uh, the real variance of trading. Meaning, it's very easy to go on, a 5, 6, 10, even 12 trade losing streak, depending on how you like what your win rate is, what your trading system is. So based on prop firm parameters, for example, if you have a 9% max drawdown and you're risking 1% per trade, which a lot of people kind of take as the gold standard, you're not going to be able to endure a 10 losing streak. Or even if it's not a 10 straight losing streak, let's say it's a little bit of bad variance, you get 5 losses, 2 wins, and then another 5 losses, you're pretty much still close to blowing up the account, right? I think
well,
most people are risking too big. Sometimes we see people make very big payouts and then blow up their accounts. We just recently paid out our biggest payout of this year. The trader made $45,000 on a 100K account. Requested the withdrawal. We paid out within 24 hours. And that was our biggest payout for the year. And he still got the account. He's still live trading that account, which I'm kind of interested to see his journey. He's actually coming on the Hydra podcast tonight. I'll be having a conversation with him, so it'll be interesting to see from like what we spoke on email. He's been trading a long time, but I know that the hardest part for traders has always been not even just like getting to the first payout, but keeping their account after the first payout. I think that's where most people fail and most people struggle. If they even make the first payout, is they don't last, and I think that mostly is a risk management thing.
Yeah. Also because people are impatient, and prop firms seem to be like a really easy way to make a lot of money in a short amount of time, and people don't have the patience to put in low size and low risk to be here for the long term,
Yep.
but they want it quickly, and that's the life we're living in these days. Everything needs to be quickly.
Which kind of defeats the purpose of prop firms in the first place, because you're supposed to be trading on less risk with a higher amount of capital. But everybody sees that the numbers that could be, and then they want that number. And then if it goes wrong, then obviously that results in instant blow up.
They get the stars in their eyes. They see that they have a $200,000 funded account, and they're like, "Oh, if I could double this account."
The what if mentality. The what
Yeah.
if. Thank you, got it. Cameron, what do you recommend someone with lack of experience or skill to do? If you have no experience at all and you want to start with trading and get into trading and prop trading with Hydra funding, what's the first thing you need to do?
I think first and foremost, you need to kind of go, like, I guess if I had to go back in time and kind of put myself into my shoes of a beginning trader right now and do it differently than what I did, I would probably go on YouTube and try to find whatever free information I could from different traders that are out there that are putting out information, and find someone that I resonate with, someone that seems to be like speaking to me or speaking to whatever issue I'm having or whatever life I'm trying to build. Uh, and I would start with that. Just try to build up a list of potential traders that you could see yourself being as a mentor. I also think everyone needs to understand that no one that's posting anything on YouTube day trades for a living. It's just not real. Anybody who's trading out there, they have side income or they're running a business like I do. I have Hydra funding. I have my educational business. I can pay my bills regardless if I make money or not trading. So I think everyone needs to kind of come to the realization also that they're not going to go quit their job and all of a sudden just become a full-time day trader. You have to understand that how much stress is involved with trading on top of that. And trading should be a tool to increase wealth.
Mm-hmm.
I don't think it's going to be an avenue for you to become a full-time trader and you don't have any other source of income. You should always have something that can keep your life sustainable, because the more amount of stress that you're putting on yourself from the outside, or the more amount of stress you're putting on yourself to perform in trading, the worse of a trader you're going to be, because you have way too much stress involved in trying to make profitable trades. So you need to have some sort of side income or keep your job to be able to pay your bills so you can still live comfortably regardless of you making money or not trading. And you also come to find with that you'll become a better trader because you don't have that much pressure on yourself to perform. There's always the saying, never use money you can't afford to lose. And if you're trading solely in relying on yourself on trading only, then you can't afford to lose because that's your only income. So it's just not a real way to make money. There's nobody's fucking trading for a living on YouTube that all these fucking traders out there are saying that they are. They're not. It's all lies. There's business income. They have prop firms, they have brokers, they have educational businesses that they're paying for the bills. And I'm not trying to put that down. I'm just saying that's the reality of what's happening here. Like, I made $1 million last month trading through this crypto bull run, but that's not my only piece of income. Right. And I'm not saying that I'm trading for a living. I'm not. I've been in the trading industry for 20 years and I have multiple businesses. So I just think that's something that's important that traders should be understandable on when that brings me to the point of when they're picking who they want to be their mentor, they should be looking out for the language that these people are saying. If they're just not even acknowledging that side and they're saying, hey, this is all from trading, I only trade it. So they should understand that when they're seeking out guidance from someone that they can trust to understand what the reality is of trading. Trading, you can make a shitload of money, but none of these guys out there are solely making money on trading and paying for all their Lambos with all that. So that's one thing when you're picking out who your mentor is. Second, I would be to go buy mentorship from whatever person you're looking at. Whatever, if you're looking for crypto, find someone that trades crypto. If you're looking for someone in Forex, find someone that trades Forex. If you're looking to trade stocks, find someone that trades stocks. So the most important thing to do is before you even start making any trades with real money is having the full, basically download of a system and a strategy and full understanding that in your brain before you even ever try to execute any sort of trade. Because otherwise you're just flying blind. And even once you download that information in your brain, you're probably going to blow up your account 100% because you need to pay the market tuition to get your ass kicked to understand that, okay, I understand what I'm supposed to do. But once you're in the actual live trade, all that kind of goes out the window. Mike Tyson's got that famous quote where he's like, everyone's got a plan until you get punched in the face. So if you even have a trading plan, all of a sudden the market flips or some piece of news comes out and all things, shit goes crazy. Now you're like, fuck, that kind of just broke my plan. Or maybe I'm going to change my plan because now fear has arisen and I might change my decision here. So you're going to go through a lot of those ups and downs as a trader that you have to deal with. And that's only something that you can experience, learn from experience. I can tell anybody like, hey, don't buy here. We just went on a massive run, like hit fucking crypto. We go on these massive runs and everyone's like, ooh, I'm going to start buying up here. I'm like, dude, we just like pumped 100% in the last week. Like there's so much more downside than upside right now, but they don't understand. They want a piece of the action and then they'll buy and then they'll get their ass kicked and then they just paid market tuition. Now they've learned a lesson.
Hopefully.
So I can't yeah, I can't teach people those things. I can tell them, but until you experience these kind of things in trading yourself, you're not going to actually fully understand it. It's going to go in one ear and out the other until you lose and you kind of go through that process. Like I don't think there isn't any traders out there who just start trading and just instantly start making money. I think it's a rite of passage to lose at least 1, 3, 4 accounts. So that's why another thing is to start small because you are going to lose. You're going to lose it all and probably pretty quickly. So that's what I would say. It's like go on YouTube, find someone you connect with, look what their language is. Are they just saying I'm a day trader and I'm making some extravagant life just from trading alone and not even mention that they have a prop firm, a broker, an educational platform, and they're making millions of dollars on that side of the business that's paying for the lifestyle and not acknowledging that, not even bringing that up. Find someone you trust, go through their course, don't make any trades until you have a full understanding of what system you're trading and how to properly manage the risk. And then from there, start small because you're probably going to blow up your first few accounts anyways.
Thank you for the clear explanation. And from both of you, the transparency is really nice to see from what trading actually is, and that you really need to get fucking smacked in your face because that is what's going to happen in the end. So thank you for that. At Hydra Funding, there are different kinds of challenges traders can choose from. Could you walk us through the process why a new trader would experience when joining Hydra Funding? And could you elaborate on the different challenges you offer?
Yeah, so I think we have a very straightforward challenge model. You know, if you've been in the prop space for any period of time, I think most people are familiar with the 1-step and the 2-step models. And I'll highlight some of the key differences between the two. For the 2-step models, you know, the main difference obviously is that you have to pass twice, right? There's a phase 1 and a phase 2. But the main differences between the accounts are the 2-phase is a slightly lower priced plan. They get higher leverage on the 2-phase. For the Forex side, we offer up to 50x leverage on currencies. And on the 1-phase side, you only get 20x leverage. That's one of the biggest differences. The second biggest difference is the max drawdown. So on the two-phase accounts, you get a 9% max drawdown, and phase one, your profit target's 8%, and phase two, your profit target's 5%. So there's actually an inverse ratio. You have more drawdown than profit target to work with. So that's a positive ratio for the trader side, right? You have more room, more wiggle room here. Whereas on the one phase challenges, they are easier to pass. We do have a higher pass rate on the one phase, and I think that that part's natural because you only have to pass once. But the max drawdown's tighter, so you have a 6% max drawdown with a 10% profit target. Now that's the other way around, right? You have less drawdown than you have profit to work with. So you need to really, really learn how to manage your risk. Maybe you can get lucky. Maybe you just go on a hot streak and you pass, but you have to remember that whatever you pass, whatever the challenge model is, you will be trading in your funded account. So when you get to your funded account, if you still don't know how to manage risk, you're never going to be able to keep that account, right? I don't think that it's reasonable to be risking 1% per trade when you only have a 6% max drawdown. I think that's
Mhm.
madness, right? You're probably guaranteed to blow up the account at some point or the other. You're going to have to turn down that risk if your goal is to trade it sustainably, trade it long term, right? Whereas, maybe on the 9% max drawdown, on the two-phase side, you can risk a little bit more. So if you're a little bit of a more aggressive trader, you don't mind, there being two steps, you want the higher leverage, two-phase is kind of the way to go if you really need that extra margin, that extra leverage as well. So that's kind of the main difference on the single phase and the two-phase side. It's very, very similar over on the crypto side as well. We also offer the both one phase and two phase. So it's really up to the trader to decide. I would say really understand the numbers of your trading, how you like to approach the markets before deciding which one to go with. Another thing to note is none of our plans have a trailing drawdown. So everything is static, balance based. Your daily max loss, your max overall loss is all based on balance. So it's not based on equity, and there's no trailing drawdown. So that part we're very, I think that part's a big benefit to traders. I think trailing drawdowns are very much an additional stressor because you're never really building up additional wiggle room for you to maybe decide to risk more or less, right? Let's say on a 200K account, if you're up $10,000 on it, you could start to decide, say, hey, like I have an additional 10K to work with. Maybe I start to risk a little bit more than 1% now, right? Because I've built up a buffer, and we really want traders to be able to do that. And I think any firm that kind of has a trailing drawdown, if you haven't experienced what it's like trading with a trailing drawdown, my word of advice is stay away from any type of challenge that has a trailing drawdown because it makes it infinitely harder. Like it's a very, very much an increase in difficulty to have a trailing drawdown. So I would say if you're a beginner, if you're just getting into it, stay as far away from a trailing drawdown as possible. No matter if the if the price is super cheap, there's a reason the price is super cheap because probably a lot of people are failing. Um, yeah, so that's kind of the products that we offer, straightforward model, and whether it's one phase or two phase, the drawdown is always static. It doesn't trail, which means you can build up a buffer and kind of manage the risk as you see fit, right? So if you build up, let's say on a 100K account, you make $10,000 in profits, not having a trailing drawdown means that additional $10,000 is able to be used as a buffer. So you can start to say, hey, maybe I want to risk, 1%, 2% even per trade. And you're going to be fine because as long as you don't violate the 5% max daily drawdown, you're free to use the account however you see fit. So, coming back to the question, I would say for traders that are joining, especially if they're newer, let's say less experienced traders, I would definitely stay away from any type of trailing drawdown plan, no matter how cheap or how good the offer is. There's a reason why certain plans are as cheap as they are. It's because no one's passing, or something heavily impacts the pass rates, and having a trailing drawdown, I can tell you, is a very significant factor towards pass or fail rates. So yeah, if you're a beginner, looking to get in, I would definitely say the two phase is probably more beginner friendly because you just have that much more room for error, right? Your profit target is less than your drawdown, meaning you're able to take a little bit more risk, without having that pressure of breaching the account. Whereas the single phase, maybe it's better for a little bit more experienced traders who understand how to manage risk, how to manage that tighter drawdown balance, and understand that it's going to take trading a little bit differently on those accounts. So yeah, I think that's kind of the main difference between the two.
Okay, thank you. So yeah, prop firms these days have various rules that traders must follow. As you just said, the max trailing drawdown. Can you elaborate on more rules and regulations that traders at Hydra Funding must adhere to?
I think pretty much everything, everything is pretty standard. Everything that we have is, on our website. You can see. I probably would like to touch on one or two things that maybe some other firms don't have, or that might be more unique to Hydra Funding. I'm pretty sure we're not the only firm that has these rules, but for example, we have a list of prohibited practices, which you can see in our terms and conditions. It's in your trader's agreement. When you get funded, you have to sign it. And it's also in our FAQ. So you can go take a look at the full list. But, one of the things that I'd like to highlight is that we prohibit gambling type behavior or activity, right? So what that means is if we look at a trader and we realize that he's maxing out the margin on his account every single trade, right? He's just maxed out, no stop loss. That to us is classified as gambling type behavior. And what's going to happen there is if a trader is viewed as having gambling type behavior, they're actually going to probably get put on a blacklist and we're not going to be working with that trader anymore. That being said, we have one thing in Hydra, which is we pay out traders even if they breach their accounts. So, if someone, let's say, is up, 10% on a 100K account, they breach the max daily drawdown, right? They draw their account down by 5%. We will still pay out their remaining share, even though the account is breached. For any breach reason, we will pay out any of the profit share. I think we definitely hold that standard very highly. There's a reason why we've had 100% payout success rate in all of our operations, because we understand that that's the deal. When you get into the prop firm space, that's the deal, that's the handshake agreement that you're making with the trader, which is if I pass and I make profits, these profits are real and I get to keep my share. So we definitely pride ourselves on that. So that's something that, definitely on the positive side stands out for us. um and there's also one rule that I want to highlight that maybe not every firm has. Some other firms have this, uh, which is we move the max drawdown to the initial balance after a trader's first withdrawal. So let me elaborate on that a little bit.
Man.
We allow the trader to make the first withdrawal at any time. So if you want to make it on day 1, day 30, day 60, day 100, it doesn't matter. You can make your first withdrawal anytime, and then subsequent withdrawals are every 30 days. But once you make that first withdrawal, the max drawdown moves to the initial balance, right? So let me just give an example. If you have a $100,000 account and you grow it up to $120,000, you now have $20,000 worth of profit. Your max drawdown is still, let's just say it's a one phase, right? It's still 6%. So that means you can still draw the account all the way down to $94,000 without breaching it. But let's say you request a payout of $10,000. That max drawdown will now move and stay at $100,000, right? Think of it as from the prop firm side, we're moving our stop loss to break even on a trader to make sure that, we cannot be underwater on this account. And that's one of the rules. That's one of the ways that we're able to make sure that, we're sustainable, because we know that, if someone is coming in, they punt, they bet big, they withdraw all the money, and then they're basically playing with house money again, right? And they're just going to rinse and repeat this cycle until they blow up the account. That's one of the toxic types of trading behavior that we do see in the industry that we definitely want to avoid. So that's our kind of solution to this issue. And another rule that I think is more common with futures firms, maybe not so much with CFD firms, that we have on the crypto side. This doesn't apply to Forex side. Well, also, this max withdrawal rule only applies to the Forex side. On the crypto side, it always stays. So even after first withdrawal, you still get the max drawdown. So there's some differences between the plans. Um, there is one rule on the crypto side, which is we have a daily cap. So we have daily cap at 3% profit or loss.
About the 3% profit cap on crypto is we have a 3% profit and loss cap. So if your account on any of the crypto accounts goes into a 3% profit, all your trades are closed and you're capped that day at your 3% profit. So all your trades are closed, you get to proceed the next following day. So that sounds obviously like, oh, well, I want to take advantage of this full crypto run, but you have to also understand that uh, with the amount of volatility in crypto, we can't just let it just fly off into the oblivion. If people go max leverage on some sort of altcoin or Bitcoin or something, then that puts the firm at big risk. But it also is the same on the loss side. So if your account goes 3% down on any given day, you're also automatically stopped out. So your trades are also protected on the downside, but it's also protected on the upside for the firm. So it's a double-edged sword. But this is the only way as of right now that we can safely provide crypto funded accounts while letting our traders get access to trade crypto with more capital, but also letting the firm operate profitably. Kind of like I was saying before, you look at a 20-year chart of Forex, it's a flat line with a bunch of lines like this across, almost like a heartbeat. But if you look at a 20-year chart of Bitcoin, it's up and to the right. So it's a different market. It's a different style of trading. And so with that, that's a rule that we have to enforce on the crypto side of the funding thing.
Thank you for clarifying that. Of course, every business has its hurdles as well. What are the major challenges Hydra funding faces at the moment?
I think as of right now, I think that the biggest hurdles that we face is at the end of the day, prop firms are all essentially the same, right? We're all offering the same product. Some people are taking on more risk by, we're seeing some people that are offering these like 50% discounts, which then it makes us hard to compete on the sales side. And there was a lot of FOMO a while ago before all the prop firms started to collapse. We were seeing everyone just drop their prices, running massive discounts. We're like, how are we supposed to fucking compete with this? This is like wild, crazy. But when you see that, that's also a red flag that if they're making it easier to pass and it's cheaper, that means that that firm, yes, might be bringing in some short-term revenue, but they're also putting themselves at risk because now they're going to have that much more traders trading that could potentially be asking for payouts that could put them upside down in their account. So I think the biggest challenge that we face is just it's a marketing game at the end of the day. For the most part, everyone is offering the same exact product. It just matters how do we build trust within the community and how do we get our brand in front of more traders' faces so that we can show them what we offer and how can we build trust. So I think the biggest hurdle as of right now is just marketing. It's just how do we compete in marketing, but do it in a way that's not shady or offering some crazy discounts or offering people some unrealistic approaches to trading, which I think a lot of people do just to get the attention. So it's as of right now, I think it's just an attention game.
On the marketing side, you also have to take into account that every trader that's being onboarded carries a certain amount of liability, meaning there's a certain percentage that is going to be due to be paid out, right? At come 2 months, 3 months, however long it is, there's a certain liability aspect. And if firms are trying to compete too hard, they're trying to slash their prices too low, or they're making things too easy to pass, they're gonna very easily be insolvent. And that's what we've seen in the industry, definitely. And there's probably a lot of firms out there that are insolvent probably without even knowing it, right? So they'll probably find out like later down the road. So the whole thing, like exactly like Cam said, is how do we market our firm in number one, an ethical way, number two, ensure that we're always able to pay out, that we're always able to meet our liabilities, right? And that means not participating in things like a race to the bottom, 50% off sales all the time, challenges getting easier and easier to pass. There needs to be certain standards in the industry. And I think the last year and a half has, I think, probably been good to, kind of flush out some of the bad players. And it's also been, I think, educational for everyone in the prop space, because they realize it's not just the cheapest and the easiest to pass, because we were getting so many questions during that period, comparing us to other firms. They're like, oh, like, now it's phase two is only 3%. Why is yours still 5%? And they're like, this firm is doing this and this firm is doing this. Now I get to say, well, those firms aren't around anymore, but back then I couldn't. They were making tons of sales, and we were getting complaints about, like, yeah, like, why are you guys, so much more expensive and harder to pass? Why should I even trade with you? Right now we kind of know the reason. I think we needed that cycle in the prop space, and now I think people are a lot more cautious. A lot of people have been burnt by losing funded accounts, losing challenges, losing payouts, right? So now I think we're in a space where firms are definitely also more focused on longevity and making sure they're able to stay. There's always going to be bad players in the space. It's unregulated, it's new. And honestly, it's not that difficult to start a prop firm these days. But, how you run the firm, again, I think is of the most importance. And yeah, I think we need to find that balance between something sustainable and still being able to market and create an attractive product that traders feel like they can make money with.
Okay, thank you for the transparency. Let's move on to the next topic. I was wondering, what steps are you taking to ensure Hydra funding's longevity and future success?
Yeah, I think we've touched on this earlier. We definitely prioritize our risk management aspect a lot, right? We work with our
Gamer.
partners. We have a deal where, essentially, we give up a very large portion of our revenue to make sure that we essentially have insurance on this side, so we're always able to cover any of the liabilities that we have. That's the kind of deal that we're on right now. We've also tried in the past managing our own risk, right, like completely uh, being on our own on that side, and we realized what a huge undertaking that was, right? It's not just it's, you need tons of capital to back up any potential liabilities. And especially the more you scale a business within prop, the more capital you need backing that for potential payouts. The more accounts you issue, the larger accounts you issue, the more you're going to be liable. And I would say, like, there's a reason we're able to offer account sizes of up to $1 million, is because we know that we're able to pay out on that side, even if someone comes in, makes a payout. Like, our largest payout was almost $40,000, and we just paid out last, I think, a month ago. And zero problems, zero issues. We've never had to halt, pause, uh do anything funny, like, oh, like, our payout system's not functioning at the moment, we got a delay for 2 weeks. These are all bad signs, right?
And run a sale in between or something.
Yeah, and then just like,
Super.
hey, by the way, 50% off, guys. Those are all very, very red flag things that I think, traders really need to stay away from. But yeah, like, we have been able to make payouts this entire time, right? Like, throughout the whole process, we've always been on time. I think our average payout is processed within 24 hours. That's our usual time, and we've never had any issues here. And that's because we've taken a big we've made risk management and the ability to pay out the first and foremost priority of the firm. And I think that's what every firm needs to do. The good players will make sure that they're always able to pay out, because the longer you're able to build a track record, the more traders you're able to pay out. These people, every single trader that gets paid out is essentially going to be an ambassador for you, because he's going to tell his friends, right? And his friends are going to go to a firm that has just paid their friend out, because that's for sure. Like, they know something. They didn't see something on the internet. They didn't, it wasn't just some certificate somewhere. It's someone they know got paid out. That's like a huge vouch for a firm. And I think that's how we see it, is the more we can continue to pay, that's essentially going to be the strongest marketing that you can do, is paying traders out.
Yeah, thank you. Hydra funding really seems like a firm that can be trusted for traders. So that would be great opportunities for traders to look into. We've already reached the final part of this interview, and this question is always my favorite, as it is filled with gems. I'm curious to know if you could give one of advice, and I would like an answer from both of you. If you could give one piece of advice to funded traders in the prop trading industry, what would it be?
To funded traders, like traders that are managing a funded account.
To traders doing challenges.
Okay, I'll let Cam go first.
Yeah. Um, I would say the most important thing you can do is change your mindset about what your goals are. And I would say if you have a goal of hitting certain numbers, get rid of that goal. Stop focusing on, I need to get X amount of dollars per month, because you're going to change your way of thinking and way of trading if you set a number that you need to reach this goal. You don't get to create opportunities in the market. The market creates opportunities for you. And you can only make money if you take advantage of those opportunities by waiting for the market to come to you. And then it just depends on if you're prepared to capture that opportunity. So when I hear traders talk about, like, is it feasible for me to make $10,000 a month, or my goal is to make $10,000 a month? I think that's shooting yourself in the foot, because you're creating these fake numbers in the ether for whatever reason, because that's just what you want, but you don't get to choose what you want. The market's going to create opportunities. It might be months or weeks or days, depending on what time frame you trade, before an opportunity is presented to you, that if you're trading a system, that system is telling you, okay, this is the opportunity. We are now able to execute this trade. It's either going to be a win or a loss. And whatever that outcome is, that will determine how much money you're going to make that month and how many times does that opportunity arise in a given month. So I think number one would just be, get rid of targets or goals. The market's going to let you do what you want to do. And also, you have to understand that in order to make more money, that's all based on how much capital you're trading with. You don't get to be like, well, I have a $100,000 funded account, but I want to make X amount of dollars. So I'm going to increase my risk from 1% per trade to 2% per trade. Never do that. That means you need a 200K account, and you keep the same risk parameters, whatever you're trading. And so if you want to make more money trading, you have to increase capital size. You don't increase risk size on that front end. So those are the kind of the two things that I would say to anyone that's wanting to get into funded trading is, get rid of goals. Whatever trading account size you're using, that's what will determine the amount of profits you can make. And also, the markets are going to present the opportunities for you, and that'll determine how much money you're going to make. You don't get to determine how many trades you're going to take that month. However many market setups show up in your face that you're actually able to trade, that's what's going to determine the amount of money you can make.
Along very similar veins, I would say, if you're getting into funded trading or trading in general, I would say be prepared to deploy a lot of patience, a very, very copious, a very large amount of patience, because I think trading, a lot of people get into it, or they get sold this get rich quick dream. Especially now with the funded account amounts that you see, you start to fantasize. You see stars, and you're like, oh, I could make this much and this much. I quit my job. But the reality is, it's going to take you a long time. Trading, I don't think it's a get rich quick game. I think it's a get rich slowly game, because the power of compounding, if you've ever kind of understood or looked into how compounding works, you should be viewing how you're going to be able to grow your account over the course of the next 5-10 years, maybe, as opposed to how much you're going to make this month. Right? I see so many people, coming into the funded game saying, oh, like, I just need a 200K account and I'm going to make 3-4% per month, and that's going to be enough. They say like 3-4% a month, like, like you can just magic it out of thin air. Like, have you ran, like, if you've ever done the math and ran the numbers, if you try to compound 3-4% a month for, like, I think 10 years, you are beyond the richest person on the face of the planet that anyone has ever seen, right? There's like this 3-4% a month seems like a very reasonable target, but it's a ludicrous fantasy. Like, no one's able to just clockwork churn out 3-4% a month and make a living off of that. I think just that's a fantasy that you need to get rid of. You need to understand that some months you're going to win, some months you're going to lose, right? But it's about expanding your view, taking the bird's eye view and saying, hey, like, if I can generate consistent returns, then I can grow my money. Exactly like what Cam said earlier. I think you should view trading not as a way to escape your life, escape your job, But I think it's much more healthy. I'm not saying that you can't, and I'm sure there are people that are actually doing it, just like there are professional poker players who only make money from poker. But I think majority of poker players, traders, they have other sources of income. I think it's going to be much healthier for you psychologically, and you're going to be able to be a lot more patient if you view it as a way to grow your wealth, over the next 5-10 years, a way to build up the nest egg, right? The one positive thing about trading is, I think, especially in Forex, versus your traditional investors, maybe people that invest in the S&P 500, is, bull or bear market, if you're a consistently profitable trader, you're going to be able to make money in years where, a lot of investors who are investing in stock markets are going through drawdowns. If there's a bear market, you're still going to be able to generate returns, and in the long run, you're going to outperform. And I think that's probably a much healthier way of looking at trading. And if you're looking at it that way and not as an escape from your life, or some type of magical solution to how much you hate your boss, you know then I think you're going to be able to take the right approach, and you're going to be able to slow down, you know take advantage of what you have, the environment, right? The education that's available on YouTube these days, the funding environment that you're able to get. I think it's one of the best times ever, in history, to become a trader. But you also, have to make sure you don't fall into that trap of make money quick, get rich quick. I want to quit my job tomorrow. I want to make $10,000, $20,000 a month, 4% a month. You need to get rid of all of that type of thinking, because I think if you stay with that type of thinking, you're never going to succeed.
Okay, thank you both for these valuable insights. One last thing I want to know from you, Cameron, is, as a trader for almost 20 years, how do you handle losses?
Um, that's a good question. It's always, I mean, it depends on what kind of loss you're taking, right? It can be as simple as, you know, you're on a good win streak and you take one loss and you're like, oh, well, it's just one loss. But then there's also situations where you're over leveraged on one side and you have 3 to 5 positions open and you take losses in all those. And that puts you in a little bit more of a drawdown. And you're like, well, fuck. Or there's situations where you get too confident after going on an epic run and you're over leveraged when things are too hot, and all of a sudden things dump and you just gave back 6 months of work in a week.
No.
And so these are all situations that I've gone through as a trader. So sometimes if you do find yourself in a situation where all you're thinking about is revenge and I need to get that money back for that money lost, I think the most important thing you do is take a step back from the trading seat and try to find a way to get rid of the emotion. Because no matter what ever just happened, there's a situation in your mind where you're trying to figure out, how can I fix this? How can I get out of this fast? Because a lot of times when those losses do come, like they always say, it's you taking the stairs up and the elevator down, because things drop much faster than it took to actually get to that level of elevation. And so you need to figure out a way to reset your brain and say, okay, this is where I'm at. The money's gone, but I need to start from this new point. My new starting point is down here. Even though it was just up here, a lot of people want to get back up there fast, but you're not up there anymore. You just fucked up and you're not up there. And so you need to reset your brain down here and be like, this is where I'm at. This is my new starting balance. If I was going to start with this much money and erase the memory of what just happened, this is my new starting balance. And I have to start with a new framework from right here. Whereas most people are going to be like, well, my starting balance is actually back up here, so I need to figure out how to get up there fast. You're not up there anymore. You fucked up. You're starting down here, and you need to reset your brain as if you were just starting over from where you're at right now. And I think that's where a lot of people mess up when they go through those losses, is they can't reset to, I'm here now. They go back to, well, I was up here, so I need to get back there before I reset. So it's a difficult thing. It's a very difficult mind game. At the end of the day, trading is a game of human psychology, of trying to outsmart everyone else, as your losses don't come from, or your wins don't come from just thin air. It's coming from, if you're on an open live exchange, those wins are coming from somebody else's losses. So all I try to do with all my education is teach people how to be on the winning side of that transaction. Is how do we outsmart everyone else when everybody's making the wrong decision? How do we turn that into an opportunity to take advantage of? So when it comes to losses, just you have to reset, whether you go do hot yoga, sauna, clear your mind, come back to the trading station and be like, okay, this is my new starting point. If I was going to start today knowing what I know now, how do I do it? Rather than trying to get yourself back up here because you're no longer there.
Okay, thank you. Insane value and 100% true. As we wrap up the interview, I would like to thank you both for your insights. Is there one last thing you would like to say to our audience?
No, I think I just want to wish everybody good luck. Thank you for having us on here. And yeah, if you're looking for a firm, if you're looking to get funded, either for crypto or Forex, hydrafunding.io.
Yeah. That's about it for me. I think I've given it all.
Thank you so much, everyone, for watching or listening. Don't forget to hit the like button and subscribe to our YouTube channel. You can visit hydrafunding.io, as DY just said, to discover if they match your trading aspirations. And see you next time. Bye-bye.
See ya.
Cool. Thanks, guys. See ya.
Thank you.